Reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, we are 55 minutes away from the closing bell on this Thursday, June 26th. Carol Masser, Tim Stenivek, live in our Bloomberg Interactive Broker studio. We got a rally underway. We're just off our best levels of the session, but I'm looking at the 11 major industry groups in the S&P 500, and 9 of them are higher. You've got real estate at the bottom of the pack down about 1%, and consumer staples just down a hair, down 0.25%. Top of the pack, communication services, Tim. That group up 1.5%.
Okay, Eric Weiner is going to join us in just a few minutes because we are on the precipice of a record close for the S&P 500. Is everything awesome, Carol?
Everything. Nothing bad could possibly happen. Can I even say that? I mean, there's so much percolating, and the next 2-3 weeks we know are really important in terms of what the White House, what the president does specifically. Does he get those trade and tariff deals done? Where do they land? What does he get with the tax and spend bill? We're expected to hear about that a little bit later on today.
Yeah, 4 o'clock is the event that he has scheduled. We don't know much about it. It's a so-called big, beautiful event, I believe, is what the White House is calling it. We will bring that to you live if the president does speak during our program. Also, speaking of politics, the dust has settled after the mayoral primary here in New York City. What now?
Yeah, I feel like the media momentum, right? The stories being done and people just weighing in from all walks. That has certainly picked up momentum. We're going to get into that. And then from the tax bill to that mayoral race, we're going to have Mark Morial. He's president and CEO at the National Urban League. So we're going to kind of build it out from there and get his view.
A lot of people are talking about how young Zoran Mondani is. Mark Morial was the youngest mayor in New Orleans history. Or I should say, youngest mayor at the time from 50 years. So in 50 years. So he has an idea of what it means to be a young person in charge of a big city.
Sometimes people say it's age. Sometimes people say it's experience. I don't know. We'll see what he has to say.
Let's see what Amy Morris has to say. She's in for Charlie Pellet, and she's got a check of the day's trade and top business stories. Hey, Amy.
Hey, Tim, stocks are off their session highs, but the S&P and NASDAQ each briefly topped their closing peaks in intraday trading. We do check markets for you all day long at Bloomberg. The S&P 500 up 46 points, NASDAQ up 193 points. The Dow is up 381 points. 10-year Treasury yield at 4.25%, the 2-year yield at 3.72%. And we're waiting for earnings from Nike after the closing bell. That company continues to eye a turnaround despite tariff headwinds and inventory challenges. Store traffic, though, is getting better, so Nike might report better direct-to-consumer sales. Shares of Nike up 2.3% at this hour. Walgreens Boots Alliance reported quarterly profit, beating Wall Street's expectations. The company is set to be purchased by private equity firm Sycamore Partners for $10 billion by the end of this year. The plans for the future of Walgreens, though, remain unclear. Shares of Walgreens less than 1% higher. The latest reading on first quarter GDP came in a lot weaker than expected. Bloomberg's Michael McKee with that story.
This is the third reading. It comes in at negative 0.5%, which is significantly worse than what we had seen in the second reading, which was a 0.2 decline. Personal consumption was only 0.5%. It had been initially reported as 1.2%.
Bloomberg's Mike McKee reporting there. Fewer Americans sought unemployment benefits last week as layoffs remain low. Jobless claims fell by 10,000 to a 6-week low, but jobless workers collecting unemployment rose by 37,000. That's the most since November of 2021. A lot of businesses are reluctant to create new jobs. Recent college graduates are now facing the toughest job market in more than a decade. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Business Week Daily with Carol Masser and Tim Stenivek.
Hey, thanks so much for that update, Amy. Do appreciate it. Carol, we are very close to a record on the S&P 500. It briefly topped its February closing record. That was pre-Liberation Day. That's exactly what I want to talk to Eric Weiner about. He's senior editor, Equities Americas for Bloomberg News. He joins us here in the Bloomberg Interactive Brokers studio. Can you help me understand something, Eric? The specter of tariffs on July 9th is still on the horizon here. And I'm having a hard time understanding what specifically has changed when it comes to certainty versus uncertainty after that April 2nd announcement. where stocks bottomed just about a week after that. What shifted here?
Well, I would put it to you as a question.
Okay.
What if you didn't believe that he was actually going to reinstate the tariffs? What if you believed that the pause was going to continue? Then how would you trade this?
So that's the bet right now.
Pretty much. The idea is that, I mean, we're working on a bunch of different stories about it. We're talking to investors, we're talking to traders, we're talking to portfolio managers, all over the place. And basically, the thought is that it's going to be a hodgepodge of he calls them deals, but some sort of arrangement, some pauses, and that basically the impact will be muted in the exact same way they were on April 9th. If you look at when things fell apart, it was when he stood up there with a piece of paper saying, we're going to charge everybody this, and then
the penguins are going to pay.
Right.
Yeah.
Right. This country's going to get this country's going to get this, all of Europe's going to get that. And then we come back a week later and he's like, we're going to hold off for 90 days. As soon as that happened, Wall Street started getting the idea that which was always the bet, that he wouldn't do anything to really harm them. And that's still the bet. So that people are looking ahead, thinking the tariff deadline is not backing anybody off from buying stocks. It's really about everything else.
Scarlett Fu earlier this week, Carol, I think on our simulcast, said she's thinking it'll be a 2-week pause.
A 2-week pause.
A 2-week extension, rather. Yeah. Is there anyone who you guys are speaking to on the equities team right now who is saying, sort of outlining a timeline as to what they think it could be?
No, I think that people would assume that it would be more substantial than 2 weeks, and maybe even another 90 days.
So that wouldn't give that much time to actually do something.
I feel like, wait, we already have, help me, because it's hard to keep track, 10% higher tariffs. That's already out there.
Right.
So that's playing its way through our system. And now we're waiting to see what else, right?
Yep.
Comes down. So he could essentially just keep extend, right? And putting this off, delaying it. But at some point, he's either got to walk away from it, right? Or do something.
Well, he can't really walk away from it because it's his policy. But your point about the baseline is very real, and that's what Powell's talking about.
Right.
The idea that, and that's what you're starting to see, is inflation working its way through the system. Just because if you have a 10% baseline tariff, you just made things 10% more expensive.
Right.
That hits. So it's not hitting in earnings yet, but we have an earnings season coming up. It's not hitting necessarily in the hard data yet, but there are a bunch of different areas where you can start see it percolating, and that would be what would pull people back. It's not that they're expecting him to come down with the hammer.
Yeah.
They're actually expecting something much mellower, on July 9th. It's what comes afterwards.
So markets like nobody else. And I'm just curious that once we know what the specifics are, will markets be like, okay, don't love it, but I got it. Now I know what I'm working with. And how does that kind of settle out? Is that when we look at valuations and say, okay, maybe too high, or maybe they'll deal with it, or we'll just have to, how does that work its way through?
The fear is another freak out.
The fear is another freak out.
Because when you look at the degree of how far the tariffs spread, that it's really, really hard to calculate exactly what the economic implications are, like in a single number like GDP.
Right.
So, and that's really what it comes down to, right? Mm-hmm. So, what is this going to mean for tech stocks, which are actually driving us higher right now? Mm-hmm. What is this going to mean for growth generally? What is this going to mean for prices? And it's really, really hard to game. That's why, the idea of a pause is so appealing, because it's okay, well, we have the baseline, things haven't hit yet, we can wait for the data to come in. If he starts moving things around and saying, we're going to keep Europe, but we're not going to keep this, then the math gets a little bit dicier, and it gets harder to justify. We have some people saying 16% isn't a big deal. We have some people saying 16% is kind of a game ender. So it depends on how you see it.
And a lot different from what it was for a long time.
We've spent pretty much the entire interview talking about tariffs and the looming tariff threat, or not. What else is at risk, or what else is a risk for equity investors right now?
Well, the tax bill is seen as something that could be stimulative. I'm not quite so sure about that. The deficit and the debt are something that people are concerned about, and that's about the bond market and the spillover into the stock market. But there just are a ton of different risks out there. When you look at global growth, when you look at oil prices, do you believe that actually Israel is done bombing Iran and Iran is done, attacking Israel?
Or do you believe the U.S. is done?
The U.S. is done in being involved, right? So there are so many things that are at play right now that it seems like traders are just sort of simplifying everything, thinking there's momentum in the market right now. Buy now, don't lose, and then as soon as you get one of those signals, that signal, you start selling.
Where does the unpredictability factor of President Trump factor in terms of how, figuring out where the market goes? Because we know, and I say this every time, I'm not speaking out of turn, but can say one thing and then doing a 180, and that puts everybody on edge and keeps them off balance. So does that how do you factor that in?
Well, what they're factoring in is that right now they're saying they have no plans to extend anything. They have, the war in Iran is over. We're going to pass the bill, and people don't exactly believe it. So, it's kind of like the boy who cried wolf. So, what you have is when if Levitt gets out there and says, "Well, we have no plans to extend the tariff deadline," everybody says, "Yeah, but you're gonna." So that's kind of when you talk about the unpredictability, the thought is the unpredictability will work for Wall Street.
I was just going to say in the favor of Wall Street versus going against it and throwing a surprise that might unnerve investors. Great stuff. Thank you. So appreciate it.
Thanks
Eric Weiner. He's Senior Editor, Equities Americas for Bloomberg News, joining us right here in our Bloomberg Interactive Broker Studio. What do you got?
I got a headline crossing the Bloomberg. Interesting news in the world of Uber. Uber's in talks with its founder, Travis Kalanick, to fund a self-driving car deal. This according to the New York Times. Uber looks to fund a purchase of the U.S. arm of Pony.ai. Uber and Pony AI deal talks are preliminary. Uber shares, though, have extended their gain to 3.6%.
Wow. And we know Uber is on
Kalanick,
quite a run.
Past.
It's up 56% year to date. Wow. That's a big deal. Hey, stick around, everybody. We continue right here on Bloomberg Business Week Daily. This is Bloomberg.
321 on Wall Street, I'm Amy Morris. This Bloomberg Business Flash is brought to you by Home Title Lock. Homeowners, when was the last time you checked your home title? Go to HometitleLock.com/Bloomberg for a free title history report to make sure you're not already a victim of title fraud. That's HometitleLock.com/Bloomberg. We check the markets for you all day long at Bloomberg. The S&P 500 up 0.7%, NASDAQ up 0.9%. The Dow up 0.9%. The 10-year Treasury yield at 4.25%. The 2-year yield at 3.72%. Sources say Omid Afshar, a powerful executive at Tesla and one of Elon Musk's closest confidants, has left the company. It is the latest high-level departure during a volatile period for Tesla. Tesla stock now down more than 0.5%. Sources tell the Wall Street Journal CoreWeave is in talks to acquire Core Scientific. Core Scientific is one of the largest owners and operators of high-powered digital infrastructure for Bitcoin mining and hosting services. CoreWeave is a cloud infrastructure provider for AI. CoreWeave shares are now down more than 1%. Core Scientific shares, 33% higher. Let's say it again, 33% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's the Bloomberg Business Flash. Now back to Bloomberg Business Week Daily with Carol Massar and Tim Stenovec.
Amy, thanks so much. Do appreciate that update. A Republican plan to cut $250 billion in Medicaid and other healthcare spending hit a procedural roadblock in the Senate today. It complicates efforts to pass Donald Trump's massive tax and spending package. We go down to Catherine Lucy, Bloomberg News White House correspondent. She joins us from Washington, D.C. Just a reminder to everybody, the president is participating at 4 o'clock today in what his press office calls one big, beautiful event. If he does speak, we will go there and bring you his comments live. Catherine, perhaps that event is ostensibly about this so-called big, beautiful bill. Is this bill at risk as a result of cutting $250 billion in Medicaid?
This certainly slows this bill down. It certainly complicates it. This, as you said, what's at issue here is a plan to cut $250 billion in Medicaid and healthcare spending that the Senate parliamentarian has said they can't move in this bill with the processes that they are doing here. Leaders are saying they have time, that they have plans, they can do this. And I think they are looking at ways to sort of refashion this, but it does take time to rewrite legislation. It does take time to do this and to keep a sort of combative group of Republicans on board. So trying to keep everyone rowing in the same direction is an issue. That said, the event at the White House today is Donald Trump trying to do just that. He is trying to rally support behind this bill. He is aggressively pushing for it to be passed by July 4th. He is personally lobbying for it. And so I think he's going to pull out all the stops to try and make sure that this happens.
So what's the time? What does this do to the timeline, right? That's what everybody, we know that there's a lot of pressure, Catherine, on the president in the next couple of weeks to get a bunch of stuff done, including trade, tariffs, and of course, his tax and spending bill. So what's the timetable if there is a rewrite? How do they do it? You're right, that's complicated.
It's complicated. They are now working to do this. And we'll have to see how quickly they can come up with, a new version of it. I think you guys know as well as anyone that Congress never does anything until they're up against a hard deadline. So things do happen when they feel like they're
just like
backs
us,
are
Carol.
against the wall.
I'm so deadline oriented.
So there is a little bit of that, but I think you are really going to see an aggressive effort by the president who really wants to do this by July 4th. And we'll see if he can make it happen. But it is, this is his main legislative focus, for this term. This is his top legislative priority. And he and Republicans really think that they need to pass this to have something to run on next year in the midterms. So it is a top priority.
All right, good stuff. We wanted to check in and find out where we are on this, so really appreciate it. Catherine Lucy, she's Bloomberg News White House correspondent, joining us from our bureau in the nation's capital.
Well, from the nation's capital to the financial capital of the world, we are, of course, talking about New York City, where Andrew Cuomo's loss is Eric Adams' gain. Just days ago, the New York City mayor faced steep re-election odds, but Adams, who dropped out of the campaign as a Democrat to run as an independent, is suddenly looking less toxic to a class of moderate voters. Laura Namias is Bloomberg News New York politics reporter. She joins us here in the Bloomberg Interactive Brokers studio. Laura, you were on with us earlier this week, and you said don't count out Eric Adams.
Right.
Essentially. And that's what the strategists have been telling you, but I think a lot of the public had said, you know, after the challenges he faced and him dropping off the Democratic ticket, he's kind of done. He's not so done now.
He's not so done, in part because of the drastic underperformance of Andrew Cuomo in the primary. I think toward the end there, Cuomo backers were maybe expecting the race to be close. They didn't expect Andrew Cuomo to be losing on the first ballot in this contest by more than 6 percentage points, a gap that's likely to widen next week when all of the ballots are fully counted, despite the fact that he had an insane money advantage over every other candidate in the race, including a $25 million super PAC backing his candidacy. So they're wondering, if he couldn't win this, can he win the whole thing? And should Cuomo drop out and consolidate behind a different moderate candidate, maybe Eric Adams, so that he doesn't play spoiler and hand the election to Mamdani or a Republican, Curtis Sliwa, who's running on the GOP line.
Laura, Eric Adams looking less toxic is still toxic. So I'm just curious, like, how that plays politically.
So that remains to be seen. We haven't seen fresh polling that's nonpartisan post-primary, but the most recent poll numbers for Eric Adams are terrible. He was polling in the teens. His favorability in New York City among voters was in the teens. Like 70% of New Yorkers disapproved of the job that he was doing as mayor as recently as a month ago. So it's not an easy path to victory, but there's some thinking that maybe if people are disenchanted enough with the idea of a Mamdani candidacy, they could get behind an Eric Adams one.
Have you heard anything? So there's the supporters of former Governor Cuomo.
Yes.
And we should note that Michael Bloomberg, the founder of Bloomberg LP, the parent company of Bloomberg Radio, did support Governor Cuomo ahead of the primary. Do supporters have any supporters of Governor Cuomo come and said, wait a second, we can now support Mamdani?
So here's what's going on. Donors are having a conversation. There are also some powerful backers of Andrew Cuomo who are labor unions. And right now, conversations are happening with labor unions about who they are going to pivot toward backing in the general. And we are hearing from some sources that it's likely that a lot of them are going to coalesce behind Mamdani. Their agenda largely dovetails with some of the things he said he wants. That's very different from some of the donors who backed Cuomo who are in finance or real estate, who are seeing some of Mamdani's policies around rent control, around taxes, as like an existential threat. But those conversations are happening right now. It's fair to say that a lot of conversations are happening and that there's maybe a panicked air to some of the conversations. They're going on right now. It's likelier that the unions might back Mamdani than some of the big money backers.
Yeah, no, that's really fascinating, right? Like, you know, where there's politics, there's money, and where there's money, there's politics. But it's just, like, you do wonder if ultimately Cuomo is out, you know, what's the assumption about a lot of those, you know, a lot of the political donations? Does it automatically go to Adams? Like,
we could see, so in 2013, if people will remember back then, Christine Quinn was the favorite of moderates and a lot of people in finance in the Democratic mayoral primary. She lost. Bill de Blasio ultimately won. There was an effort to consolidate support behind de Blasio because it was thought that he was going to face a competitive general election against Joe Lhota, the Republican at the time. And a lot of people got behind de Blasio, and they also sort of talked to him about moderating his positions, about his nominees and who he was going to bring into his administration. And there was this sort of a moderating force by people who had backed his opponents getting behind him at that point.
Well, speaking of backers, prominent backer Bill Ackman, who was one of the most prominent backers in the super PAC supporting former Governor Cuomo, he has a very long post on X, which is pretty typical for him. He writes very long messages on the platform. And he writes about crowdsourcing the next candidate. He's really worried about Mamdani. He said, who is your best centrist candidate who could go toe-to-toe with Mamdani on the campaign trail and on the debate stage? Let's crowdsource the names and then do a poll. If someone is ready to raise their hand, I will take care of the fundraising. Is it that easy?
It is definitely not that easy. This is a little bit of inside baseball, but after tomorrow, Andrew Cuomo cannot get his name off of the November ballot. He's running on an independent line that he set up in case he lost the primary, which it looks like he did. After tomorrow, if he doesn't decline that nomination, it's impossible to get his name off the ballot. The ballot is basically set. In order to get someone off of the ballot, that person has to either be nominated to run for a vacant position somewhere else or be disqualified by death, going to prison, or moving out of the state. Those are really significant events. You don't want to force someone to die or move out of the state or go to prison. So it's just not that easy. It's not a question of right candidate plus right money. There's rules, in elections, and
Favorite
they've been
quote
set
of the
in
day.
advance.
I'm just going to say, favorite quote of the day. We got to put that one and send it out. It's still early. A lot can happen.
Oh, yes. I mean, think about 3 months ago, if we were having this conversation, nobody in the general public really knew who Zoran Mamdani was.
Right.
And now he's looking like the next
That's all we're
mayor,
ever talking about right now.
possibly of the city of New York.
Anecdotally speaking, I live in South Brooklyn. The ground game that Mamdani had was unbelievable. I would get notifications, Carol saw them, of like door knockers, coming over to talk to different members of our building. And it's kind of wild. Like, he built something really from the ground up. Do we see that happening during the general election from now until November? Does that continue?
For him, I think that that's plausible. It's too soon to say what will happen for the other candidates who are in the race. Curtis Lewa, there's independent Jim Walden, an attorney, and Eric Adams, of course, running on his own ballot line. We can't predict the future. But this enthusiasm that Mamdani had, and actually this sort of managerial competence that he did show in getting this campaign organization off the ground and ultimately looks like winning this primary is nothing to be trifled with. It's a serious operation. He had a huge get out the vote effort, and the data is really showing us that he was able to convert people who had never voted before into voters in a New York primary, usually a very low turnout affair. He has shocked everyone.
That's a big deal.
Yeah.
An indication that we would assume that interest is going to carry all the way through, or it depends, like who's left in the race, right?
Yes, definitely.
I don't know. You're the New Yorker. What's your last question?
It is, yeah. I mean, I'm still blown away by the ground game and the interest. I think he was seen as somebody literally 12 weeks ago that didn't have name recognition.
Yes, and he also really lacks managerial experience or much experience in Albany to be. Yes.
His opponents made on the debate stage.
Right. But he has been saying, and I think people are really starting to take this more seriously now, that his biggest qualification managerially is look at the campaign that I've run.
Correct.
Which built up from nowhere to more than 20,000 individual donors, tons of volunteers that converted enthusiasm into actual votes. A much more difficult thing to do than it looks like.
And there's a leader, and then there's all the people that are around him too, right?
Yes.
It's not just the one. I mean, it obviously the candidate first and foremost, but it's his whole team or her team. Laura, thank you so much. Laura Namias, keeping us informed on New York City politics. She is Bloomberg News New York politics reporter. Coming up, we are driving to the close. Got about 26 minutes to go, and we've got a rally underway on this Thursday. This is Bloomberg.
It's 3:40 on Wall Street. I'm Amy Morris. We check the markets all day long at Bloomberg. Stocks are higher. We go to the first word breaking news desk now for today's afternoon call with Bill Maloney.
And good afternoon, Amy. That's right. U.S. stocks with a bid as the NASDAQ 100 trades to an all-time high. The Dow's currently up 373 points. S&Ps are higher by 46, and NASDAQ climbs by 0.9%. The U.S. 10-year yield is at 4.25. Gold is little change. Oil is in the green, but Bitcoin, that's lower by 0.3%. Among the main 11 S&P sectors, leaders were telecom and energy. Only consumer staples and real estate were in the red. And leaders to the upside in the Dow, Caterpillar and Goldman Sachs, while Merck fell 1% and led to the downside. In deal news, CoreWeave is in talks to buy Core Scientific. And in other news, the Fed's Collins said the baseline outlook is to resume cutting later this year. Wrapping things up, Nike reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Amy?
All right, thank you, Bill. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris, and that is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, TikTok. We've got about 18 minutes to go until we wrap up the trade on this Thursday. A rally underway, pretty broad-based. We are looking at about 0.75% higher on the S&P 500, up 45 points. Dow Jones Industrial Average, a gain of almost 0.9%, so good for a gain of 367 points. NASDAQ 100, 197 points to the upside. Get ready for another record there. It is up 0.9%. We're still a few points, about 6-7 points shy of maybe another record close on the S&P 500, but we'll see whether or not there's some momentum going into the close today. I just want to pull up the S&P 500, just make sure I didn't misspeak. You do have most names higher, 356 to the upside, 146 to the downside.
That's what's happening on the equity side. On the fixed income side, on the bond side, the 10-year yield is lower right now by 4.3 basis points, 4.24. The 30-year at 4.81, and the 2-year at 3.72. Let's talk fixed income with Joyce Wong, Vice President and Senior Client Portfolio Manager at American Century Investments. The firm has about $274 billion in assets under management. Joyce joins us from New York. Joyce, welcome back to Bloomberg Business Week. It is always great to chat with you. I know you're focused on fixed income, but we got to talk about the equity rally just a little bit, because I know even though your focus is fixed income, you are not ignoring that. What do you make of the exuberance that we're seeing?
Yes, of course. Thanks, Tim and Carol. Great to be back. I think this really matches what we've been thinking on the fixed income side, is that the worst is really over, right? So, of course, we all remember the big sell-off that we saw in April. That is past. It seems like we will be able to reach tariff negotiations that are better than the original slate that was presented on Liberation Day. The 90-day pause is coming up, so I wouldn't be surprised if we saw a little bit of a retracement of this exuberance in the equity side as we get closer to that deadline. And that's why I think you've seen yields kind of stay pretty calm. So, we don't think that recession is likely, but could we start to see weaker data going into the summer, into the fall, that would prompt Fed cuts? Quite possibly.
All right. And so then it determines, or we have to start then figuring out, if the Fed's cutting rates, is it just to tweak what's going on, or is it because they are worried about a slowing in some of the U.S. economic numbers, so slowing growth? And we did talk about this with our Mike McKee about some of the numbers, slowing down here. So then again, is it just slowing growth, or is it something more problematic like a recession, which then plays out in all different ways, certainly in the U.S. economy, but also when it comes to U.S. investment? So what's the scenario that you are kind of working out, gaming out with your team?
So we don't think recession is likely. That's a tail risk. I mean, the way that would come about would be if we don't get positive settlements on the tariff side and things re-escalate back to where they were on Liberation Day. That would be the worst case scenario, because again, the market's really written that off. Of course, this week we've had some drama around the Fed chairman position, with President Trump potentially announcing a replacement for Jerome Powell earlier than anticipated, making Jerome Powell a lame duck. So there's a couple of things out there. Of course, we have big, beautiful bill still lingering. All that should be resolved in the next month or two. So we should have more clarity. Again, recession is not our base case. I think the Fed will still cut into the back half of this year because most Fed governors and Chairman Powell have acknowledged that the current rate is still restrictive. And if we do reach a more favorable settlement on tariffs, and we don't see as much inflation pressure building in the back half of the year as we had projected earlier due to the tariffs, that would leave the Fed a lot of room to reduce 1 or 2 times.
So what does that mean then, Joyce, when it comes to investing? You guys have a lot of assets under management. You see flows, you see what those flows indicate about kind of investor psyche and what's going on in terms of their thoughts on the investment environment. Tell me about the flows that you are seeing and if investors are more nervous or more willing to commit, if they're willing to take on more risk. And what is your advice to investors at this point?
We've definitely seen a healthier risk appetite across the board, both on the equity side and our fixed income franchise. I think people are looking at, potential forward earnings. Their yields are attractive right now, right? You can get 5, 6, 7% in quality fixed income, depending on what sector you are, how far down the capital structure you go. But that's really attractive, given that most individuals and institutional investors are really trying to reach that 6 to 7% total return for the year. So if bonds can get you there, 90% of the way, you don't have to take as much equity risk. On the fixed income side,
Well, I just want, when you say high quality fixed income products, what are you referring to here? Are you talking treasuries? Are you talking munis? What are you talking about?
So both of those we think are good options, but because we don't see recession as a likely base case, we think credit spreads could potentially widen slightly, especially in the high yield space. We are very selective in corporate high yield. We really favor investment grade right now because spreads are pretty tight. You had a little bit of a spread widening post that April volatility in the markets, but that's retraced. So given that there are still some of those big things outstanding that we talked about a few minutes ago, we are hesitant on wholesale risk and high yield. We favor investment grade quality, corporate bonds, select structured credit. All of these on the short duration side, you can find really good opportunities, especially as an active manager. We're excited about fixed income right now.
I am curious though, Joyce, it's hard to erase things that happen to us in life generally, and certainly for investors. So when you have the volatility and the extreme swings that we saw earlier this year, investors have memories. And I'm just curious what you do take away from what we've seen in the first few months of President Trump's second term and what could still come when it comes to the investment environment.
My biggest lesson, I think, both professionally and personally, is that you have to stay the course and have faith in your long-term strategy, because we know that there are going to be these bouts of volatility. I'm sure everyone's seen those charts where if you miss the 10 best days in the S&P, you basically lose 80% of your total return over 10 years, right? So what you don't want to do is make knee-jerk reactions and try to time the market, especially with things like duration trades or adding and subtracting credit exposure. What you want to do is rely on fundamentals. We really follow a bottom-up investment process that doesn't really have a lot of volatility in the short term. And we try not to have knee-jerk reactions to headlines or things that are coming up from the Oval Office nowadays.
All right, Joyce, so good to check in with you. Joyce Wong, she's Vice President and Senior Client Portfolio Manager over at American Century Investments with about $274 billion in assets under management, joining us there right here in New York. All right, folks, just a few minutes to go before we head over to our TV colleagues. Count you down to the close. We are looking at the S&P at 6140, just about 4 points away from maybe another record close. This is Bloomberg.
This is Bloomberg Business Week Daily with Carol Massar and Tim Stenovec on Bloomberg Radio.
Yes, indeed, everybody. We're just about 7 minutes away from the closing bell on this Thursday. We're going to head over to our TV colleagues, count you down to the close in just a moment. We're also going to talk or break down Nike earnings when they cross the Bloomberg. Having said that, crossing the Bloomberg is a tweet from U.S. Treasury Secretary Scott Bessent, and basically he's asking Congress to cut the revenge tax measure from the tax bill. He says, based on this progress and understanding, I've asked the Senate and House to remove the Section 899 protective measure from consideration in the one big, beautiful bill. This understanding with our G7 partners provides greater certainty and stability for the global economy. There's more to it, but let me just tell you, the revenge tax provision is part of President Trump's signature tax legislation, would impose a levy on foreign companies and investors from countries that the U.S. determines have been unfairly imposing digital taxes on American technology companies. So that's what he's looking to have pulled from the bill.
We should know Daniel Flatley on our Bloomberg team reporting on our Bloomberg News team reporting yesterday that the Treasury Department is nearing a deal that would make the so-called revenge tax irrelevant. The agency's second-in-command said it's a development that could bring great relief to Wall Street investors worried about punitive tax measures on foreigners. Here's what Deputy Treasury Secretary Michael Faulkner said in an interview, quote, "We continue to have negotiations with our OECD partners and continue to hope that in the very short run, we have a breakthrough that would make conversations about 899 irrelevant." He was referring to part of President Trump's signature tax legislation that would impose a levy on foreign companies and investors from countries that the U.S. determines have been unfairly imposing digital taxes on American tech companies, which is exactly what you said about the definition of this so-called revenge tax.
It's called revenge tax because it would increase rates, only for countries whose tax policies the U.S. deems discriminatory. And so critics of the measure have argued that the proposal would deter foreign investment, either contravening the Trump administration's stated goal of encouraging additional manufacturing and business activity, or adding confusion and hurting the U.S. economy amid changing trade policies and a potentially worsening fiscal outlook. So it's interesting, these penalties at a time when the president has been very clear about encouraging, wanting, prodding other countries and other companies outside the United States to actually invest in the U.S. and set up shop here. So, yeah.
Well, speaking of this legislation, we do expect to hear from President Trump.
We do.
At 4 o'clock, oftentimes these events don't necessarily happen at the times that they're scheduled for, but it's scheduled at 4 o'clock. It's the big, beautiful event, is how the White House is referring to it. If we do hear from the president and he makes comments pertinent to our audience, we will bring you those comments live.
Absolutely. We'll be watching it very closely and, of course, listening to it as well. In the meantime, as we've mentioned, we've got a rally underway, and we've got stocks just off their best levels of the session, but still up about 51 points, 6143.50. We have the S&P.
Is that a record, Carol?
Nope, 6144. We have to go above that. 6144 was the record close on February 19th. We're at 6144, so we could, I don't know how many decimal points we're going to take it out to, but...
no, we are, right?
Yeah.
We're at 6144.
Yeah. So
this is the highest since, as of right now.
6144 was the record close on February 19th. So,
but this is 6144, 63.
That's what my point is.
And according to the data I'm looking at on the terminal...
6145, that would put us at a record. That's where we are right now, 6145. Are you guys laughing at us? You should, because it's kind of funny. But this is what we do, right? The devil's in the details. How many decimal points do we go out?
Oh, 61, now we're definitely at a record.
Yep, 6146. There you go, folks. We'll see if we hold it.
We'll just keep counting for the next 2.5 minutes. Sorry, I interrupted you,
What are they
Carol.
doing over there? 6146.30, so we'll see if it holds. We've got about 2.5 minutes to go. Now I'm just glued to it, because that's what we like to do. Do not go anywhere. We're heading over to our TV colleagues, folks. As we said, we could have a record close. NASDAQ 100 is going to be at a record. Let's see if it's the case for the S&P 500. Do not go anywhere. Over to our TV colleagues. The closing bell. It starts right now.
Hi, a full breakdown of all of today's market action that starts right now.
closing bell. Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here with Scarlett Fu, taking you through to the closing bell with a global simulcast. Carol Massar and Tim Stenovic join us now from the radio booth. Welcome to our audiences across all of our Bloomberg platforms, including our partnership with YouTube. It was 61.44. That was the high on the S&P 500 back in February. As of right now, Carol Massar, don't jinx it, the S&P is trading above it.
No, it just went below it. So it's like, we're right there. We're right there. Don't blame me. Don't blame me. But listen, we've been fixated, right? But it's pretty interesting to see quite a rally underway. And investors seem to be pretty enthusiastic. And there's some expectations of some Fed rate cuts. So maybe that's helping out a little bit.
Yeah, 2 decimal places is where things go in our data. So we could still be at a record even if we are at 61.44, depending on the decimal places. You know, I asked this question to Eric Weiner earlier, who covers markets for our Equities Americas team. And he's essentially saying something that I think Scarlett and you said earlier this week, which is that everyone's betting that this 90-day pause that expires on July 9th gets extended by a significant period of time, because what is not priced in are those tariffs going back up in just a few days.
Absolutely. And of course, we got the headline just moments ago that the Treasury will exclude U.S. companies from some taxes imposed by other countries. That's the deal with the G7 in exchange for removing the revenge tax bill from President Trump's one big beautiful bill. That seemed to be the impetus for the last minute rally.
It gets to the idea, though, too, of how many loose ends are out there. You mentioned trade. Obviously, we're talking about this budget bill, which still has to be addressed. And then there's still the geopolitical issues, but certainly not as much chaos and uncertainty as we had a couple of months ago. And that, of course, might be a big part of the reason why we've continued to see such strength in U.S. financial markets, including on this Thursday afternoon. The S&P 500 has now rallied about 23% from those April lows back on April 8th, and it looks like today it's going to settle right around 61.44 and change. That would be below the all-time record high of 61.44.15, but I think folks will take it. A gain of 0.8% on the day. The Dow adding 400 points, or 0.9%. The NASDAQ Composite up a percentage point on the day. The NASDAQ 100, a fresh record high, up more than 200 points, or 0.9%. And the Russell 2000, believe it or not, that's your outperformer, Carol Massar, up more than 35 points, or 1.7%.
Yeah, interesting to see, right, that outperformance, and maybe that reads, some expectations about the domestic economy. Having said that, if you dig into the S&P 500, we've seen more names in the index higher today. I don't know why, but my terminal's a little slow right now. There we go. 372 names to the upside, 130 to the downside.
Absolutely, and that is reflected in the IMAP as well, which looks at the S&P 500 and its 11 industry sectors. And you can see that the decliners here are really pretty small slices of the market. REITs are down about 0.6%. Consumer staples, a traditional haven, defensive group, down about 0.2%. The outperformers here, communication services up almost 1.8%, energy and consumer discretionary each gaining more than 1%.
All right, everybody, let's get to some of the individual gainers. And first, ticker FUL. We're talking about HB Fuller.
What'd you say?
I said FUL.
Oh, I'm sorry.
You only got the first letter.
She would never. To you, Romaine.
All right, that's Doug. Wow, up almost 11% in today's session. Stock up after Citi maintained its neutral rating and $62 price target for the paints and coatings maker, noting better than expected volumes and strong engineering adhesive margins. Keep in mind that the company last night boosted earnings per share guidance for the full year that beat the average analyst estimate. So upbeat earnings, upbeat commentary. And so you've got HB Fuller, I'm not even going to say the ticker again, is definitely an outperformer. I'm going to go to Circle as well, because that one continues to kind of bounce around a little bit, but we did see some more outperformance. The stock rising in today's session, up another, 7.5% in today's session. That's after falling about 25% the 2 days prior. More players beginning to enter the stablecoin industry since the U.S. Senate passed stablecoin legislation. So we continue to see some interest in that one. There was also a note, our own Bloomberg Intelligence, Dick Shigera putting out a note and says, Circle's post-IPO surge and fresh interest from JP Morgan, Walmart, and Amazon suggests that stablecoins, blockchain-based tokens tied to traditional currencies, are moving from the fringe into the financial mainstream. And so Circle certainly stands to benefit. And let me go to one more, NVIDIA, just because, we saw this one again, among the largest market cap companies out there. That was courtesy of that 4% gain yesterday, adding another 0.5%. So I just wanted to kind of throw that out there. And that one has bounced quite a bit from those April lows, and it's now up about 15% this year. But I think it's up about 50, 60%. I had the number in front of me and I lost it.
I just add
April,
thanks
though.
for that, Carol. I'm going to add a couple of honorable mentions. QuantumScape up 34%,
Yes.
and then we were watching Core Scientific. They closed up higher by 33% on the back of that speculation that CoreWeave might actually be interested in buying the company.
A difficult day to find prominent decliners. I do want to start with Micron. We reported those numbers after the bell yesterday, down today by 1%. It was an outlook that wasn't quite rosy enough to keep that 2025 rally going, despite posting third quarter results and a fourth quarter forecast that did exceed estimates. It is still up around 49%, more than 49% so far this year. The company's high bandwidth memory sales are surging. The company, though, did not predict the kind of runaway growth that some investors were looking for. So we saw the stock decline today.
But it's like doubled since April 8th,
Yeah,
right?
it's pretty remarkable. But, you know, investors, they're looking for a lot right now. And look, the gains this year have been pretty amazing.
Well, the concern was, right, we just talked about that,
We
right?
did, yeah.
Yeah, about the prices and,
Yeah.
I'm sorry, I was listening.
That's okay.
Sorry, I'm a little distracted today.
Wow.
I was watching the S&P, seeing if it would close at a record high. Her mind's still on it.
Scarlett, I love you. Go ahead.
Okay. Scarlett mentioned REITs. Spot of red in the S&P 500 today. Equinix, the worst performer in the S&P 500 on a percentage
Equinox,
basis. Right? EQIX is, you guys see what I have to deal with daily? But it's fine. I mean, Scarlett, you kind of deal with the same thing, right? I don't know.
Remain interrupting?
What?
No,
Yeah.
never.
How dare you?
It slumped as much as 14% a little earlier in the session, but it's off its worst levels of the day to close down 9.6%. That was its biggest intraday decline since March of 2020. The company's long-term outlook disappoints investors. It resulted in at least 2 downgrades. This news was yesterday, though. The downgrades were first provided, or the targets rather, were first provided to Analyst Day Wednesday, resulting in a 9.1% drop. And finally, well, this is now a micro cap. It used to be a small cap before today. Altimmune Inc. down 53%. A clinical stage biopharma company. Shares plunged. The company said a mid-stage trial for its experimental therapy for a fatty liver disease showed the drug was not significantly different from a placebo when treating fibrosis.
All right, let's take a look at where yields are. In fact, seeing continuing downdraft, particularly on the short end of the curve. This is the 8th straight day, actually, that we've seen the 2-year yield move lower, down about 7 basis points on the day. And we continue to talk about the steepening of that curve. You see that reflected in the 30-year yield, which, of course, only fell about 3 basis points, so about half of the move that we saw on the 2-year.
All right. Let's get to some stories that are definitely on our radar. And I don't know if you guys saw this one. It's now, I think, the 3rd most read story on the Bloomberg in the past 60 minutes. But there's something going on in the driverless car space, because you have the New York Times coming out just within the last hour or so and saying that Uber is in talks to basically have its founder, Travis Kalanick, come back and help fund a self-driving car deal and essentially help them buy a autonomous vehicle startup as they continue to kind of watch Waymo gain momentum, but they also keep doing deals with Waymo.
Yeah, this is a little wild here. I mean, it's clear that Uber is concerned about the possibility of self-driving cars. This is nothing new, though. I mean, Uber had its own advanced technologies group. It was called ATG. And this was started under Travis Kalanick before he was ousted as CEO years ago, and Dara Khosrowshahi took his place. Khosrowshahi sold the ATG group to Aurora Innovation back in December of 2020.
Yeah.
So it's like things have really kind of gone full circle here.
I can't wait to see the follow-up movie that describes how this all came together.
If it happens, right?
That's
How
really
does,
funny.
I don't understand, like, if it's an autonomous vehicle, who's Travis Kalanick going to yell at?
There's always an engineer to yell at.
Too soon? I'm sorry.
Too soon.
I'm not the one who yells at my Uber driver.
Carol, you mentioned Circle
There was
and
that video
CoreWeave earlier.
There was the video. That's the video you're referring to.
Yeah, we got it.
All right, Scarlett's got something. Let's go on. Let's move on.
Carol, you mentioned Circle and CoreWeave earlier. Triple-digit increases for some of these companies that have recently gone public. It's led to the IPO class of 2025 showing some pretty impressive returns, a weighted average of about 53% gains here. And of course, that raises all kinds of questions about whether we're going to see more IPOs coming up because the returns have been pretty good.
That's a sign of a healthy market.
Yeah.
Or a sign, right?
Yeah.
Yeah.
Hey, just speaking of the return of old folks back to their former companies, Marissa Mayer, remember her?
Yeah.
Yahoo.
Yeah.
Actually appointed to Starbucks' board. Also, Ambassador Dambisa Moyo also getting appointed there as well. That's all.
Wow. Watching people on the move. Thank you so much.
Sure
Romaine Bostic.
Sure,
All right,
breaking news.
that is a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. Folks, we call it The Closing Bell. Scarlett and Romaine continuing there on TV, and Tim and I are going to continue here on Bloomberg Business Week Daily. We will see you again, same time, same place, tomorrow.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
It is Bloomberg Business Week Daily. That is Carol Massar. I am Tim Stenovec. How did things end up, Carol? 61-41.
Yeah, so just shy. I know. It's interesting. But I mean, it touched it just before the close. So we did break above it on an intraday, but nonetheless not closing there. So we'll see what tomorrow brings. But listen, I'm not, I kid, everything is awesome, but there's still a lot of stuff going on. But if we start to see the president check boxes on spending bill and tariffs, and that might ease investors' minds, but we'll see where it all lands.
Just a quick programming note: the White House reporters have gathered for the One Big Beautiful Bill event that's at the White House. It does seem like there are several members of the president's cabinet there, including Marco Rubio, Scott Bessent, and Secretary Rollins of the Agricultural Department. We're going to bring you comments from the president live. If he does make comments that are relevant to our audience, we will bring those to you. Meantime, from the surprise ascendancy in New York of 33-year-old Democratic Socialist Zohran Mamandi to the $250 billion healthcare snag in the Senate over the president's massive tax and spending package, there's a lot we want to talk about with Mark Morial.
Yeah, we certainly do. He is, of course, president and CEO of the National Urban League. It is called itself the nation's largest historic civil rights and urban advocacy organization devoted to empowering communities and changing lives since 1910. He's also a former state senator in Louisiana and the former mayor of New Orleans. When he was elected, he was the youngest mayor of New Orleans in 50 years. He joins us from Atlanta. Hey, that's where we want to start, Mark. First of all, great to be talking with you again.
Hey, thank you. Great to be with you this afternoon.
Well, thank you. You were 36 when you were elected mayor, if our math is right. Age, how is that? Like, how do you, I don't know. When is age maybe a problem for someone? When isn't it not?
Yeah. So every 36-year-old is not the same. Age sometimes gives you energy, a willingness to innovate. But the question is really a question of maturity and the ability to deal with a difficult and demanding job, pressure on all fronts, and the ability to make decisions under pressure. So age can be both a asset, but it also can be a liability if you've never experienced pressure, you've never been in a decision-making position before, and then all of a sudden you find yourself leading a major American city. So, the jury is out. It was out on me when I first got elected, although I had a political career as a state senator and a very successful state senator who had passed at that time some 50 bills and a career as an active lawyer doing a lot of high profile cases. So when I got elected, certainly the city of New Orleans was in a great crisis of murder and police corruption and economic stagnation for the busting of the oil bust. I think at the end of the day, I proved all my critics wrong, and had an incredibly successful career turning the city around in those days. So, in the New York situation with Mamdani, he is a new face, not a very well-known face, but pulled off a very important and spectacular upset. But 44% of the Democratic primary does not achieve a consensus of New York voters. and there's a general election ahead. And I think although he has momentum, I don't think he can pop the cork and say I'm going to be the next mayor just yet.
What do you think that is so clear? And we had a conversation with one of our colleagues here, Laura Naimis, earlier in the day about the challenges that he still faces, Laura Namias. You know, Mark, the question that I have for you is a bigger question about the Democratic Party and what this says about, if anything, if this says anything about the identity of the Democratic Party on a national level. Can you extrapolate from New York City?
So some people want to focus on this sort of what I call an ideological distinction between progressives and moderates. I think maybe one way to look at it is that there may be a generational shift that this represents. In many respects, a younger candidate who ran an aggressive grassroots campaign and used the tactics of social media, running against candidates who ran more traditional campaigns that focused heavily on television and indeed endorsements. And so underneath that for Mamdani, he has to demonstrate that he can expand his coalition. He has to demonstrate that he can govern, right? Govern is not an ideological thing. Governing does bring into play one's values and one's philosophy, but it is the mayor is the local chief executive officer. Basic services, public safety, education, the condition and cleanliness of streets and neighborhoods, affordable housing. Those are the issues. It's not a job of foreign affairs, although because it is New York, there are global issues that the mayor of New York has to deal with. So to me, one of his challenges is, can he expand that coalition in an effort to win a general election and build the kind of coalition it will require to govern? I can say this. I learned that getting elected, I had a decisive win, but I had a win in a somewhat racially polarized situation. I got 95% of the African-American vote at the time. I got less than 10% of the white vote. I had to expand my coalition, hold my base, but expand my coalition to be able to effectively govern, get things done, make things happen, reform the police, expand youth services, put together a coherent economic development plan. And that indeed is a challenge that is in front of him. So I think people need to watch his early moves and what he does. But Andrew Cuomo right now is on the ballot in the general election. Eric Adams is on the ballot in the general election. There's a Republican candidate on the ballot in the general election. And as I understand it, in the general election, there's no ranked choice voting. So ostensibly, someone could get elected with 28% of the vote in a general election, in a four-way general election. So it remains to be seen. You know, the Democratic Party, like the Republican Party, is a coalition. I think that using the term party may be outmoded and outdated. And for it to achieve success in local elections like mayor of New York or mayor of Philadelphia or mayor of Chicago or mayor of Detroit may be different than what is required in a national election. So someone that may be successful in a New York where there's a strong progressive base may not be. And so I don't take the mayor of New York or who wins the mayoralty in New York as a stalking horse on the Democratic Party on a national basis. It never has been. It wasn't that way with Mayor Bloomberg, who was a Republican turned Democrat. It wasn't that way with Mayor Koch or Mayor Dinkins or Mayor Adams, even though they may have said, I'm the future of the Democratic Party. I don't think who the mayor of New York is represents necessarily the future of a party that exists in 50 states and what may happen in a national election. But having said that, like the Republican Party has to unite its far conservative wing and its more moderate wing, a Democratic candidate running nationally in a presidential election has to do the same thing.
Well, we should point out right now we are talking with Mark Morial. He's President and Chief Executive Officer of the National Urban League, joining us remotely. At the same time, we're keeping an eye on Washington, D.C. and the White House specifically, where Republicans are gathering as they expect the president to participate in what his press office calls one big, beautiful event. So we do assume he is going to talk about that spending and tax bill that he is trying to get through in the next couple of weeks. So there's some pressure on that. And we also do have some earnings out that have crossed the Bloomberg, and we're talking about Nike. And that stock, Tim, we are seeing it trend a little bit lower right now in the aftermarket, down about 1.5%.
Yeah, the company did report revenue for the fourth quarter that beat the average analyst estimate. The estimate was for $10.7 billion. It came in at $11.1 billion. North America revenue was higher than analysts expected. EMEA revenue came in at $3 billion. That was higher than estimates. Greater China revenue came in right in line with estimates at $1.48 billion. We're going to be speaking with Poonam Goyal of Bloomberg Intelligence a little later to break down these Nike earnings.
Yeah, it does seem like investors are trying to make sense of it because the stock has been down a few percentage points. Now it's relatively flat, but still a little bit lower. So we're going to continue to track it. We should point out that the company did say the results are in line with expectations, but not what we want.
Yeah, this is really interesting. Elliot Hill in the press release saying our financial results are in line with our expectations. They are not where we want them to be. Moving forward, we expect our business to improve as a result of the progress we're making through our Win Now actions.
Yeah, so kind of interesting. I will point out that the gross margin was 40.3% versus 44.7% a year ago. The estimate was 40.2%, so it did beat that. But again, and now the stock's up about 0.5%. So continue to track that, watching and waiting for the president to make some comments. And we're talking with Mark Morial, President and CEO at the National Urban League. And Mark, you know, we are awaiting comments from the president. When it comes to this massive spending and tax bill, what do you want to see?
Well, I think it's clear that this bill is in somewhat trouble. The polling is 2-1 against. There are a number of Republicans in the Senate and many in the House who I think have become less enthusiastic about deep cuts to Medicaid, veterans programs, and other programs. And they're hearing from their constituents, I think, because there's been an aggressive campaign to educate people. My sense is the more people learn about the bill, the less likely they are to support the bill. And most of the polling shows that Democrats and independents, and maybe 25 to 30% of Republicans, are not in favor of the bill and would like to see them sort of scrap it, go back to the drawing board, and put something together that's better and that may be able to achieve some bipartisan support. The great concern I have is the deep cuts to programs like Medicaid, the deep cuts to workforce, job training, and education, and the potential recessionary impact. Data I've seen shows that there would be layoffs, that there would be holes blown into the budgets of many states, Louisiana, Mississippi, Alabama, and Georgia, to name a few. If Medicaid is cut, it would damage them fiscally in a really, really severe way. So I think the president with this today is trying to rally support, trying to play a bit of catch up in an effort to demonstrate to the Congress his strong support for the bill. But that runs counter to what the American people are saying. And how this bill is too much on the cut side to pay for tax cuts that benefit only a handful of people. That's really the misbalance here. And they could do a better job. They could come up with a better package. Congress has achieved consensus packages in the past, and I think that's what's in order today.
Mark, when you look at the bill, the president, by the way, speaking right now, and we'll bring you comments if he does make comments that are really focused on our investing audience. As you mentioned, he is trying to garner support for this. In your view, do you think that the bill in this current iteration will become law?
No, I do not. I think the margins right now, with the changes that are being made in the Senate in an effort to put the votes together, the bill yet has to go back to the House of Representatives if it does pass the Senate And it passed by one vote in the House the last time. So there will be an effort to get the House to accept the changes that the Senate made. But I think this bill is in precarious shape. And I do not think that it will ultimately be passed in its current form, although there's going to be a great effort to do so because, you know, politicians, I'm a recovering politician, think long and hard about the impact of a vote, one, certainly on their constituents, but two, on their reelection.
Yeah.
And I think if swing district auras, Republicans, think that this is going to really make their reelection difficult and hard, may say, I've got to push back for a better deal because that is in my best political interest. And I think that's what you see happening. Yeah. A lot of action behind the scenes on this.
Mark, forgive us.
Well.
We have to jump to Washington. Mark Morial of the National Urban League. And folks, we do want to go to the White House and President Trump.
And also, I want to give a very special thank you. This is a hell of a group we have here. This is amazing, the quality of people. But actually, I like these people and most of those people much better than the people I just named, okay? But a very special thanks as well to Speaker Mike Johnson, who's a great, legendary guy. He's going to go down as a legend. A great friend of mine, a fantastic Senator Roger Marshall, wherever you may be. Roger, thank you very much. Thank you. Bernie Moreno, great win Bernie had in Ohio. Bernie, great win. That was a tough race. They said that was not winnable, and he won by about 5 points, so that was pretty good. So much for not winnable. Mike Lee is here. Mike, hi, Mike. Thank you, Mike. Tim Sheehy, another tremendous win. Way to go, Tim. Young, handsome. That was another race that wasn't supposed to be able to be won. They said, well, we have a very young, handsome guy. I said, does that matter? Looks don't matter, do they, Mike? Looks. Anyway, great job. You can't help it. You can't help it. Great. That was a great race, along with Representatives Paul Gosar, Greg Murphy, Tom Kaine, Jen Kiggins, Rob Bresnahan, who's where is Rob? Stand up, Rob. Let me see you. Good. He's done a fantastic job. And Ryan McKenzie. Thank you, Ryan. Thank you all. That's great. It's a big group of people. We're here this afternoon to share the stories of an incredible group of patriots from across the nation whose future we are defending with the one big, beautiful bill. This is the ultimate codification of our agenda to, very simply, a phrase that's been used pretty well by me over the last 10 years, but maybe even before that, make America great again. Very simple, make America great again. When Joe Biden used to get up and say, we will stop this horrible MAGA. We're going to stop MAGA. We're going to fight it. We're going to. I said, Joe, loosen up. It's called Make America Great Again. It's okay. Remember that he got up so angry. He was so angry. He said, make America great again. But we'll deliver a record tax cut, a record spending cut, a record investment in border security. We've done so well on the border. You know, last month, we had 0 people that crossed the border. 0. So Christy and Tom Homan and some of the people, what a job you've done. But you know, people forget about that. They don't care. The border's been fixed. I wanted to talk about the border 2 days ago at a big group. Sir, they don't want to hear about the border. Why? It's fixed. You know, it's the second time it happened to me. In 2016, I won on the border. I fixed it in about 3 months. It was beautiful. And they wouldn't let me talk about the border. Sir, nobody wants to hear about the border. But we're going to talk about it anyway. Right, Tom Homan? We're talking about it anyway. So we have a big number of dollars that's coming here because we want to keep it that way, and we want to keep it fixed, and a record number of deportations. We're bringing criminals out by the thousands. Nobody can even imagine. They let people in that were murderers, 11,888 murderers, gang members, people from mental institutions, and insane asylum. You know what that is? That's insane asylum. That's a mental institution on steroids. During the campaign, I talk about the late, great Hannibal Lecter. Do you know who that is, Hannibal Lecter? Silence of the Lambs. I'd talk about it, and the fake news would go crazy. Why does he keep mentioning? Well, because we won in a landslide. That's why they don't want to have Hannibal in our midst. And the day I signed this bill into law, almost every major promise made in the 2024 campaign already will have become a promise kept. And that's very important. Promises made, promises kept. And according to the Council of Economic Advisors, these reforms will protect or create more than 7 million jobs, add 3.1% to economic growth, reduce taxes for the typical American by nearly 15%, and increase take-home pay for the normal family of four by at least $13,000, and that takes place immediately. That's not bad, right? Look, I'm looking at that guy back there, right? It's pretty good. And if we had a person over at the Fed that would lower interest rates a little bit, that would be helpful too. It's hard to believe. This is on top of, we have to fight this guy. He's not doing the job. Each point that he keeps it up is the equivalent of $300 billion. $300 billion. So if he lowered it to, it would save $600 billion. We have to work hard with cuts on that, right? That's a lot of cutting. And this guy could do it so easily. We don't have inflation. Well, we might have inflation. Yeah, and if you do, you raise the rate a little bit. That's okay. But we're going out because Biden gave us a lot of short-term debt. And given the short-term debt, he did us no favor. So I think what we'll do is we'll probably just extend the short-term debt and then go out, because I don't want to tie it up for 10 or 15 years at a high rate. But every point is it's really more, is $300 billion. So if we got it down to 1%, we're talking about almost $1 trillion in saving just with the stroke of a pen. No work, no missing anything, just like an accounting situation. Oh, Doug Collins, I just see Doug. Did I mention you, Doug? I don't think so. I'm glad I saw you. I'm glad that somebody's going to be in big trouble with you. They didn't write your name down, Doug. Somebody's in big, somebody's in, I got you. So we think of that, though. We save, and all you have to do, it's so simple. I'm explaining to this guy, and Biden extended him. That wasn't good. I'm explaining to him, you can do so much for our country. You could save $1 trillion just with a stroke of a pen. Just the utterance of a sentence that we're going to be cutting. It's a shame. It's a shame. We're one of the highest. We should be the lowest. We're the United States of America. We'd have money coming in like at levels that they have never seen. I got a call the other day from the people in Congress because we're doing our bill. I didn't even tell you this, Mike, and they called. They said, there's something wrong with the numbers, sir. I said, what's wrong? I don't know. They're not balancing out. There's something really wrong. I said, is that a good thing or a bad thing? Well, we don't know. I said, what's the problem? We're taking in much more money than we have scheduled. I said, so far, that sounds good. They said, how much is it? About $80 billion. I said, do me a favor, check the tariff line. They called me back an hour later. Sir, we've taken in $88 billion in tariffs. Isn't that a beautiful thing? 88 billion. I thought I'd tell these little stories. Go off script and tell these little stories, Scott, right? Because it does make it a little more interesting. Although my speechwriters have just gotten every award in the book. Vince, where are you, Vince? Where are we? Where's Ross? He's gotten all these awards, and I'm going off the record all the time. Where is he? He didn't show up to the speech. He wrote the speech. He didn't show. Well, that means he has confidence in me. According to the Council of Economic Advisors, these reforms will protect or create more than 7 million jobs, add 3.1% to economic growth, reduce taxes for the typical American by nearly 15%, and increase take-home pay for a normal family by an incredible $13,000. All of these things are happening. And by the way, there's no inflation. All of the numbers I gave you, all of the money that's coming in, and maybe more importantly than the billions of dollars we're taking in with tariffs, is the fact that we've got hundreds of plants going up all over the United States that never would have been here. I was with Howard and Scott and Texas Instruments the other day, and the head of Texas Instruments, they're going to spend $60 billion in the United States. And he said, "Sir, please don't do it to me." And I looked at him. I knew exactly what he meant. He said, "You mean tariffs, right?" He said, "That's right. If you ever get rid of those tariffs, you've cost me a fortune." They're all coming in because they don't want to pay the tariffs, and they're coming in at levels, and it only works for the United States because people, it doesn't work for other countries, but it works for us. We have a record investment. We have records and everything, and when these places open up, that's bigger than the $15 trillion that I'm talking about. You know, you don't see it right away, but bigger is the fact that they're all coming in, they're building their factories, the AI factories and the auto plants. We have auto plants that are closing up in other countries. I don't want to specifically name the countries, but you know who they are. And they're coming into the U.S. and they're opening up and building like nobody's ever seen anything like it. I don't call it a miracle. I call it, this should have been done 40 years ago. We would have never lost our auto. We lost 50% of our auto industry to China, Mexico, Canada, and various other countries. Should have never happened if you had a president that said, "We're going to charge you tariffs. You're not going to build next to us. Send it in and take away our jobs." If you would have said 25, 50, or 100% tariff, not one company would have left. But they weren't business people. They were politicians, not very good ones, and some good ones, but some really not good at anything, to be honest with you. We're going to stop the largest tax hike, and we're going to do that in history. This would be, if the bill doesn't pass, there'll be a 68% tax increase. Think of that, 68%, which would be the largest in history by about 40 points. And we'll make the Trump tax cuts permanent, expand the child tax credit, and we will deliver no tax on tips, no tax on overtime, and no tax on Social Security for our great seniors.
All right, everybody, you are listening to President Trump live there from the White House, surrounded by various members of his administration. This was a planned event. We've been expecting him to make some comment ahead of what his press office calls the One Big Beautiful event. That's what they've been calling this. Having said that, he has made some comments on some various things and certainly of import to the Bloomberg audience, including the president saying that they've signed with China yesterday. We're assuming that has to do with some kind of trade deal or tariff deal, starting to open up China. And also, Tim talked about a possible deal soon with India. One would assume that, again, has to do with trade and tariffs.
Yeah, I'm just looking at the Bloomberg News write-up that President Trump said he signed a deal with China on Wednesday while discussing ongoing trade negotiations. He did not, though, elaborate on the exact nature of that bilateral agreement. Other headlines include the president saying that Texas Instruments will make a major investment in the U.S. He also made some comments about the Federal Reserve and Jay Powell, Carol. He said it would be helpful if the person at the Fed would lower rates, and he made these comments about Powell, quote, "We have to fight this guy."
Yeah, exactly. And this is something we kicked off our broadcast at 2 p.m. Wall Street time with our own Mike McKee talking about whether or not Jay Powell has to be concerned about the president talking about a replacement and the pressure on him. But Mike seemed to say, like, he's okay. He's good. He's managing it.
Thanks to the Supreme Court.
Yeah, exactly. He also did, the president that is, talk about probably just extending short-term debt. He was talking about specifically U.S., the balance sheet. And then he did also talk about Texas Instruments to make a major investment in the United States. He also went into no tax on tips, no tax on Social Security. These are, again, measures in that bill. I will remind you that it is a tax bill, but it's also a spending bill. And many have talked about what it would do to the federal deficit. We're talking about, I think I've seen $3 trillion. I've seen as much as $5 trillion being added to the U.S. federal debt.
The Mark Morial has been standing by patiently, president and CEO of the National Urban League, joining us from Savannah, Georgia. Mark, you got some of the president's comments there. And he did mention before we came back to us and gave some highlights from the headlines that no tax on tips and no taxes on Social Security, which makes me ask you, somebody who you call yourself a recovering politician, you did tell us, I believe, last time, we're not ruling anything out when it comes to your own future. We could talk about that in a minute. But I'm wondering if there's anything in this bill that you do like.
Oh, look, no taxes on tips and Social Security. Who?
This is Balance of Power, live
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. Alongside Kaylee Lyons, I'm Joe Matthew.
Tonight, the president's big, beautiful bill hits an even bigger roadblock.
If the bill doesn't pass, there'll be a 68% tax increase. Think of that, 68%, which would be the largest in history by about 40 points.
The procedural hurdle in the Senate today complicating efforts to pass Trump's massive tax and spending package as he pushes for its passage with a White House event. Why the Senate parliamentarian deemed parts of the bill ineligible to fast-track it for a vote, the delay it could cause, and the ask from Treasury Secretary Scott Bessent to remove the so-called revenge tax. We'll get into all of it when Commerce Secretary Howard Lutnick and Senator Jeanne Shaheen of New Hampshire join us up ahead.
Plus, Iran's supreme leader claims victory in the war with Israel, saying the administration's bombing achieved nothing. That declaration coming shortly before Defense Secretary Pete Hegseth held an event today calling the attack historically successful, despite one preliminary assessment that says otherwise. The shifting narratives around the attack when we speak with retired General Joseph Votel, former commander of U.S. Central Command.
And new reporting tonight on the timing of the White House's plan to nominate the next chair of the Federal Reserve as the S&P 500 nears a record.
We begin tonight, though, on Capitol Hill and President Trump's continued push for his one big beautiful bill after the Republican plan to cut $250 billion in Medicaid and other health care spending hit a procedural roadblock. The Senate's parliamentarian judging a series of key health care provisions today within this bill ineligible for the fast-track plan that would have bypassed the Senate's normal procedure, keeping Democrats out of the process.
At least two Republican senators reacting by calling for the parliamentarian's dismissal, while leadership is now working to refashion these provisions. But those rewrites risk pushing back an ultimate vote as that July 4th date inches closer and closer. It's contentious, it's in the weeds, and it's where we start with Bloomberg's Eric Wasson in the Senate for us. So, Eric, I guess a twofold question for you. A, can they rework this so that it passes muster with the parliamentarian? And on what timeline could they realistically do so?
You know, Senate leadership aides are confident they can rework this. This is basically the provision that preventing states from taxing Medicaid providers. It's a practice states have adopted that it effectively boosts their federal reimbursement rate as a backdoor way to really boost rural hospitals and other Medicaid providers. This has been very contentious among Senate Republicans. The Senate bill goes much further than the House in cutting this. Josh Hawley, Susan Collins of Maine, others have objected to that already. The parliamentarian does seem to give a reprieve to that, but Senate leaders say they're pushing forward to at least address the parliamentarians' concerns. Also ruled out was the ability to stop states from, giving Medicaid to perhaps undocumented immigrants. This comes on top of previous rulings that affected food stamps and other cuts. So far, it's about $600 billion in savings that's been ruled out, and that's raising the hackles of conservatives. They were already upset with the price tag of this bill. It's a $4.2 trillion tax cut, only partially paid for by spending cuts, and the pay-fors are going down.
All right, so, Eric, are we in for a rewrite here? And what's that going to mean for the bill getting to the House in time to meet this self-imposed deadline of July 4th?
It's going to be really close. I was just talking to Mark Wayne Mullen, one of the key negotiators here. They're talking about maybe voting Sunday night on this in the Senate after working all weekend and then getting into the House so the House can just vote on it on July 3rd and members can get back to celebrate the holiday with their loved ones. But that would be a very tough needle to thread. They've got the SALT issue. Nick LaLota of New York coming out condemning an offer from Secretary Bessent to basically make higher earners ineligible for the full SALT cap. They're at Treasury again today trying to hammer out a deal. We also have the issue of energy credits really impacting wind and solar stocks that are in flux as well.
Eric, I'd like to ask you as well about the news we got from the Treasury Secretary Scott Bessent today as well, talking about a deal on the OECD global tax deal among G7 countries to defend America's interests. And he says because that has been reached, he has asked the Senate to remove Section 899, the so-called revenge tax. Is that a guarantee that will not end up in the final piece of legislation?
I think it's very highly unlikely to be in the final legislation. We have questions into the Senate Finance Committee and others just to put a finer point on that. But it does seem that this is satisfactory to some of the provisions. Sponsors Kevin Hern of Oklahoma coming out with a statement strongly, praising Bessent's move here. The revenge tax was never really designed to go into effect. It was meant as a cudgel to get an agreement on things like the digital services tax. These are efforts that really impact Meta, Google, Amazon, Uber, and others providing digital services. It would be a major win for those companies if there's agreement to get rid of those or to lessen them.
Eric, great to have you live from Capitol Hill as this continues to unfold. Bloomberg's Eric Wasson, thank you. As we turn now for more from Bloomberg's Michael Shepard, who's with us here in studio. Mike, what do you make of this? The President of the United States just about a moment ago wrapped up a big celebration. They called it one big beautiful event because we're staying on brand here, wrapping himself with stakeholders, calling out cabinet secretaries, almost as if the bill had passed today. Is he trying to push it over the finish line here or what?
It certainly is his version of the full court press here, and while it was celebratory in tone, there was no sign of any champagne flowing or corks popping or anything like that. And they sensed the moment, and they sensed the urgency of having to get this over the line. And in making his pitch to the public, and specifically to the public on Capitol Hill, and that includes some perhaps reluctant members of his own party in the House, which will have to vote on whatever the Senate has adjusted in this bill, he is sending a clear signal about what it brings. And these are key portions of his agenda. And when we heard him speaking about this, he talked about the end of taxes on overtime and on tips and on Social Security income. And he also talked about the bill as key to border enforcement. He talked about how it includes additional funding to hire more border agents. So when you hear it taken in total, it really sounded so much like his campaign message, Joe.
Well, and we heard plenty about something else in terms of his economic policy on the campaign, too, which is tariffs. He did talk about that and trade deals today, suggesting that yesterday the U.S. signed some kind of deal with China. Do we have any clarity, Mike, as to what exactly the president was talking about?
You know, we don't. And we even went to the White House after to find out, okay, what was he referring to? And they haven't given us a signal yet what that actually means. And it may simply be that the U.S. actually inked some formal understanding from the last round of